Is the 4-year cycle finally dead? The cycle we've trusted for over a decade. For 15 years, in fact. The one that gave us the roadmap. Accumulate, halving, bull run, crash, repeat. The cycle that made Bitcoin feel predictable, even inevitable. Is it over? Because this time feels different. The rhythm's off, the halving was muted, and conviction is starting to crack. What if the cycle didn't fail, but was hijacked? They told you Bitcoin moves in 4-year cycles. They told you everything's playing out just like before. But what if none of that's true anymore? What if this time the cycle didn't break, it was rewritten? While you're watching the charts and halvings, they're rewriting the rules in boardrooms and in governments. And now, the very thing that made Bitcoin predictable is being used against you. This isn't some pattern glitch on a Bitcoin chart. It's a signal that the rules that built this market may no longer apply. In today's show, we reassess the 4-year cycle, unpacking why it feels broken, what's really driving the price moves, what to expect next, and who's actually in control. But pay attention. If you're still trading like it's 2021, you won't just lose the battle. You could get left behind forever. There was a time when Bitcoin was predictable, beautifully simple. Each cycle had clear phases: accumulation, growth, bubble, crash, rinse, wash, repeat. The halving triggered it. Scarcity, which we thought scarcity, or at least it reminded us of scarcity, kicked in. And the media fanned the flames. And just when it felt like it would never end, boom, the crash, the reckoning, and then it all started again. You could set your clock to it. It made you feel like you had the cheat code. Everyone from retail to the biggest whales danced to that 4-year rhythm. And then the suits showed up, the institution. They didn't break the cycle, they bought it, sliced it up, packaged it, and turned it into a Wall Street product. Now the halving, it still happens, but is it just background noise? The big moves, already priced in. The rallies, front run and fractionally settled. The volatility, dampened on command. But ladies and gentlemen, Bitcoin didn't disappear. It got tamed, and we always knew this was coming as adoption would happen. Turned into a clean little ticker, tucked neatly between bonds and blue chips. On April 20th, 2024, the block reward dropped from 6.25 to 3.125 Bitcoin every block. Classic halving, textbook supply shock. So where's the rally? This is supposed to be the spark that ignites the next huge super cycle. Historically, the halvings have been one of the most powerful catalysts in Bitcoin's entire cycle. It cuts the supply of new coins in half overnight. 50% inflation reduction. That scarcity forces a supply crunch, and within months, prices exploded to new all-time highs. In fact, in every previous cycle, Bitcoin hit new highs only after the halving, not before, like it was clockwork. But this time, the all-time high came before the halving. The market front ran the entire event. The big move, the breakout, the euphoria, it already happened. This isn't just unusual. This has never happened before in previous 4-year cycles. And that's not just front running. That's a structural shift in the entire rhythm of how Bitcoin has always moved. Some voices are saying it outright. The 4-year cycle is dead.
4-year cycle? Is it over?
Yeah.
Woo.
It's over.
Okay, hold on. Explain.
Others say it's not dead. It's evolving. Institutional players don't play by retail rules. They accumulate when you're scared. They buy off-chain. They manipulate ETF flows. They've changed the game. Today, halvings don't create bull runs. Liquidity does. Let me say that again. Today, halvings do not create bull runs. It's liquidity that matters the most. We're in a whole new game. Welcome to the ETF and institutional era. The broken rhythm, it didn't happen by accident. It happened because the game changed, and Wall Street is now holding the cards. Bitcoin was supposed to fix this. Remember? Transparency, self-custody, no middlemen. But now, the very institutions it was built to replace are the ones pulling the strings. ETFs were supposed to be bullish, and they were until they weren't, right? You guys know, we've seen the unwind of the ETFs happen. Why? Because when BlackRock needs to acquire Bitcoin to back its ETF shares, it can, from time to time, not always, but it does often work with people like Coinbase, who are the authorized participant, and instead of buying directly on the exchange, they can do things through internal transfers or OTC deals, meaning off-chain purchases, which allow them to buy large amounts without affecting the price directly. And this allows things like backdoor manipulation. And suddenly, Bitcoin, the asset that was supposed to bring financial freedom, starts looking like everything it was designed to destroy. If you're disappointed by this cycle, it's probably because you're playing the right game, but using the wrong scoreboard. Let's recap the cycle. 2 back-to-back 100% years, over 500 billion in institutional inflows, Bitcoin tagging a $2 trillion market cap. Does that sound like a failure to you? The problem is that retail didn't drive it. Institutions did. This wasn't a hype cycle. It was a power shift. And instead of pumping it to the moon, they wrapped it in a suit and tied it to TradFi. The volatility was lower. The retail euphoria never showed up. Adam Back of Blockworks promises that price discovery is coming as growing institutional interest and Bitcoin's fixed supply will cause inevitable price pressure. And when that happens, watch out. Bitcoin's fixed supply and surging ETF demand were always going to collide. A supply squeeze was and is inevitable, but this time it's not explosive. It's slow, control, managed, because now the ones who control the flows, they control the volatility. Everyone's still staring at the halving chart, but the smart money, they're watching global liquidity because that's where the real power lives. Global liquidity rises, Bitcoin rises. Global liquidity dries up, Bitcoin dries up. It's a 94% correlation. And yet, most people are still waiting on the next halving like it's 2017. So what should you be watching instead? Global M2, the clear signal nobody's paying attention to. Global M2 tracks the money supply across major global economies, how much capital is flowing through the system. And when it rises, Bitcoin tends to follow almost perfectly. Check out this chart. You can literally see Bitcoin bottoming as liquidity turns. It's not a coincidence. It's cause and effect. This isn't just another macro chart. This is a new cycle driver. Not block rewards, not narratives, but capital flow on a global scale. If you're still watching halvings, you're playing the old game. This is the new scoreboard. Need another one? Watch the Fed. Watch global credit flows, because when the money floodgates open, Bitcoin moves. When they close, it flatlines. March 2025 marked the end of a 5-year liquidity squeeze, the longest since 2008. That's why it's been so painful in our markets. And now with regulation rolling out, trade dynamics shifting, and rates under pressure, the table is being set for the biggest monetary injection in US history. The next cycle won't be driven by block rewards. It'll be driven by liquidity on a scale the market has never seen. And the ones who see that now will own the next decade. If Bitcoin's 4-year cycle is changing, what if there's another 4-year cycle that never will? One that quietly controls everything, from stocks to rates to liquidity, even Bitcoin itself. For years, Bitcoin's 4-year cycle was gospel, but now it's being diluted, distorted, and even front run. It's no longer the one true signal. There's another 4-year cycle, one that hasn't missed in decades. And it might be even more important for markets and Bitcoin. It's not in the charts. It's not in the code. It's in the White House. The US presidential 4-year cycle is one of the most predictable and powerful forces in financial markets. And no matter who's in office, Trump, Biden, whatever, doesn't matter. The markets, they dance to it. In fact, the chart is almost unsettling in its accuracy. Every 4 years, the stock market follows the same emotional loop. Year 1 brings optimism and new policies. Year 2 brings disappointment, gridlock, and volatility. Midterms brings a pivot, and election years, that's when stimulus flows and sentiment peaks. And while the headlines scream chaos, the charts quietly reveal the truth. Investors cycle through fear and euphoria like clockwork because the presidency controls capital flows more than most realize. Now in 2025, the script is accelerating. Stimulus is already being discussed. Liquidity is creeping back in. And here's why that matters. When liquidity hits the stock market, it spills into everything. Risk assets rally, gold moves, tech booms, and yes, Bitcoin follows. Bitcoin might not care about who wins the election, but absolutely reacts to what the election cycle unleashes. While the crypto crowd debates whether the halving still matters, Wall Street is quietly trading the only cycle that has never missed. The 4-year cycle isn't just a Bitcoin thing. It lives in Washington, and it remains the most powerful pattern in financial markets. You came here thinking the cycle might be broken, but now you know better. It's not broken. It's being rewired. The halving didn't fail. The cycle didn't disappear. But it's not just yours anymore. The same pattern still ticks, but new players are holding the cards. Wall Street's institutional guided liquidity cycles and political timing now call the shots, not miners and Bitcoin whales. And if you've been waiting for the old signal to return, you've already missed the new ones flashing in plain sight. Now, that doesn't mean all hope is lost. There are some things the cycle has revealed that we just can't ignore. But if you're still focused only on the 4-year rhythm, you're missing the bigger picture. This isn't about chasing candles. It's about understanding control, understanding who moves the markets and when, because the opportunity, it's still here, but only if you stop trading the past and start positioning for power behind the present. So I'll ask you one last time, are you still watching the old cycle? Or are you finally ready to front run the new one? Make sure to subscribe to the channel, ladies and gentlemen, because we'll be covering all the key signals you need to stay ahead of the markets. And remember, stay sharp, stack sats, and I'll see you guys in the next one.